In today's video, I'm going to show you how to use the New Day opening gap. There are two types of New Day opening gaps. The first one is formed using the closing price of the previous day's candle and the opening price of the 6 p.m. candle. The second type is formed using the closing price of the previous day's candle and the opening price of the 9:30 a.m. candle. In this video, I'm going to show you how to use the first method. So this is how you're going to mark the New Day opening gap. First, we mark the closing price of the previous day's last candle. Then, we mark the opening price of the 6 p.m. candle, and this will be our New Day opening gap, which we're going to use in this video. Alright, here we have some examples. Look at this. Our New Day opening gap is already marked. Now what I want is for price to take a low at the open. Here, price takes this low, giving us a sell-side liquidity sweep. From there, we can take our trade right here and target the highs. Now here, as price closes above this gap, I'm going to place my order at the candle high with my stop loss below the low and target the opposing side highs. And as you can see, price went straight into our target. Let's look at another example. All right, here we have our New Day opening gap. Now I want price to take this sell-side liquidity, and here it goes. Price takes the sell-side liquidity. From there, I'm going to place my order right here with my stop loss below the low and target the buy-side liquidity. And now let's see how this plays out. You can clearly see price moving aggressively straight toward our target, and just like that, it delivers our target perfectly. All right, here we have another example. We already have our New Day opening gap marked. Now I want a sell-side liquidity sweep. Here we have a low, and then it gets taken out, giving us a clear sell-side liquidity sweep. Now I'm going to place my order right here. Since price has already moved up a bit, my stop loss is going to be below the low, and my target will be the opposing side liquidity. Here, as you can see, I've placed my order, and price goes directly into my target. And lastly, here we have our final example. We already have our New Day opening gap marked. Now, I want price to take some liquidity, and here it goes. After that, I'm going to place my order right here, as price has already closed above this bearish fair value gap. I'm going to place my stop loss below the low, and I'm targeting the opposing side buy-side liquidity as my take profit. And here, after placing my order, it took some time, but price eventually moved into our targets. Now I want you to try this on your own charts. I suggest practicing this concept in a demo environment first, and if you're using it live, make sure you understand your risk. You can experiment with market entries or entries without additional confirmation, but only once you're comfortable with the concept. If you found value in this video, make sure to like, share, and subscribe. For personal guidance or mentorship, you can check out the link in the description. And if you have any doubts or questions, feel free to reach out to me on Discord.